What is going on, everybody? And in this video, we're giving state of the market and stock picks for September 16th, 2022. If that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the week ahead in this glorious market. Now, I could reiterate everything I've said up to this point, but what I've truly said and what I've always hold to be true is it doesn't matter what numbers, what data you're getting, you're reading, it's all fudged. You should know there's manipulation. We all know there's some form of manipulation. But the one thing you can't manipulate, even though some people do and they get caught, is earnings. FedEx came in this week. I wasn't expecting them to do horribly bad. What I've been waiting for is the cue. I know things are bad. My theory has been things are bad, but I will remain neutral because that doesn't mean the market can still run. FedEx after hours, essentially saying economy is slowing, warning of earnings and pulling full year guidance. Full year guidance. And then what was really interesting is that you had the CEO come on and say he expects the economy to enter a worldwide recession. Worldwide recession. Now, the rest of the world has been in a recession. It's just the U.S. has not accepted a recession. We have yet to see the pain. This past week, we've had core inflation. Rent is going sky high. So all the people that are selling, you have to understand that the demand is shifting to different things. So it's not always going to be the thing. In the beginning of the summer, it was the used cars. And then it shifted over into food and energy. And then now everybody's selling a house. And there's a massive rush into rentals because people can't afford their houses because they're losing their jobs. Bad spending habits, savings down to hardly nothing. Credit cards there's a 30%, 35% growth increase in credit cards. And then you had FedEx today, who came out and pulled full guidance for a year. FedEx is like the lifeblood of everything that circulates. You have to understand that the billions of dollars, even though it is really hard to watch billions of dollars leave the U.S. and go to Ukraine for the war, if it wasn't for that circulation of money, things would be 10 times worse than they currently are. But the thing is things are so bad that they're still starting to show. And something I've always said is to pay attention to earnings. Earnings are going to give you the truth. Everything else you're going to get is white noise, essentially. You're right smack in between a battle between the Fed and inflation. They've told you weeks ago that their goal is to battle inflation. I've been saying this. You can look at all my videos up to this point. I've been saying this part. I wasn't sure exactly what was going to happen, but on a day-to-day basis, I found out that everything, essentially the thesis that I was developing was playing out. And sometimes you get that pivotal piece of data that's like, okay, well, they're saying this and it's not that. This is why I always say you need to come up with your own thesis. But nonetheless, we are here. Tomorrow, in my opinion, is going to be a very bloody day. We're at a critical support. It's been taking us all week, and we've tried to, or the past couple of days, and we've tried to pop, and we've had absolutely no strength, price action wise. Now we get FedEx and pulling full guidance for a year. We're in trouble. Tomorrow's going to be a big sell day and coming in anticipation of a 100-point basis move next week. Things aren't slowing down. I know even on a personal level, rentals and things like that, multiple family members are moving into a rental together to make it so where they can afford a rental will actually accept them because of the panic and the fact that people are working 2 to 3 jobs. in that these places, yes, there's tons of job openings, but they can't find qualified people to come back and work them. So we're in trouble. There's no easy way around it. And coming from someone, and I knew a couple months ago that I thought we were going to rally. Then we had the war, and then more things started to develop. And I realized that there may not be a rally towards the end of the year. I need this to play out, this and this play out, and it's not. And then I started seeing other things. We saw foundation cracks, and I talked about that in the last earnings, that there's cracks in these really good companies. What is Q3 going to bring? We got earnings about a month away. We're going to start seeing how big those cracks are getting. You know, I think you're not going to see full pain until probably like Q4, Q1, and I think this Christmas you're going to really see the pain because people are going to start laying off with all these rate increases at such a rapid pace. People are going to lose more and more jobs. It's going to get a lot nastier before it gets better. And Powell was not joking. You're going to feel the pain because we were feeling it. There's been a lot of people on strike because those qualified people are working around the clock and they're fed up with it. And so you're seeing strikes all over the U.S. Things are not getting better. You can't just jump right out of recession. You know, innovation does help, but things were bad even before the pandemic. Then you injected tons more money into the market. So you have people that came into the market when all the market did was just pump. That's not the way the market typically works. It works in cycles. You just had a huge pump. Now you're going to have a huge drop. And something I've talked about, I'm going to bring this up here on the chart, which helps. And be mindful, again, something I always reiterate, the charts aren't 100%. That's why I don't do just charts. Yes, you're staring at a chart, but I don't do just charts. I do a lot of I plan a lot of my stuff around events. I use the charts to some extent, but I'm very much, this year has not been the year of the chart. If they could do an accuracy level of the chart, it would probably be pretty bad this year. Because every breakout has failed and not retraced at least 75% back. It's failed, and I haven't seen any breakout as long as it hasn't been to the downside. If it's been any kind of upside break, it's failed. And so, again, if we're pricing in 100 points, I have it marked out roughly around 36. Currently floating around what I expect is 75 is roughly around like 38, 40 roughly is where I have it. But if we go back to the high, to currently where we're at now, which I haven't actually done this in a while because, again, I've been pretty neutral. And if the inflation was good, which I was expecting it to be a little bit better than what it was, I expected us to potentially pop back up. But again, new data changes that sentiment. And so being said, here's where we are. The lowest part we got was that 36, what I keep talking about. That was only 25%. And I said on average of a recession goes roughly around 44%. So 44%, you're still looking way down here. So 44, roughly around here. So you're looking roughly around 27.20. That's still a huge drop from where we're currently at. And you have to take into consideration that there are multiple other black swans that are floating around that are very obvious if you're actually looking for them, that could make this a lot worse. You have Taiwan and you had Russia and China all over the horn today, talking about how they're going to build this great relationship and everything else. That's a black swan that if it plays out, the initial part of it is going to be bad. Understand that if we did go to war, it would actually help us better in the long run. We would become stronger. GDP would come back a lot quicker if we went into war. So there is even though it is a very bad thing, there is a very positive sentiment to it. And what could push the U.S. to go into a war? I mean, U.S. isn't going to start a war, obviously. This is why China or Russia hasn't done anything to U.S., because the U.S. doesn't want to be the bad guy, because they're the heroes, right? And so they will not initiate anything. They will place sanctions and restrictions, whatever they got to do, but they're not going to actually take action. And we'll wait for them to take action, and then we will return that action if that is what's done. And so this is why there's been this stalemate right now. But again, China, Russia, the U.S., they all could use a war to get out of their current economy slump of what's going on. Then you have the housing sector. The housing sector alone brought down the market in 2008. You were right on the peak of a ton of bankruptcies. I've been waiting for the other foot to drop. FedEx is not even the foot. FedEx is maybe the toe, to show you that everything, the whole theory that I've been drawing out for these past couple months, is starting to play out. Again, there are times when I think that, hey, it could adjust. It could go either way. The market thought that too. But then you get the data that shows, nope, it's right. It's still really bad. So if we are going to go on average, we're going to 27-20. If we are going average recession here. Now, again, with innovation and all those other things, it may not be the case. And that's just average. It could go worse. It could be better. We don't know. But currently, even for right now, to where our low was, so 36.36. So roughly, that's only a 10% drop. If we drop another 10% from there, which some economists have been saying we're going to get another 20%, so that roughly put us roughly around that 3,100, which I could see, and something I've been talking about, that if it breaks the 36.36, I'm looking to buy at that point, because I think at that point, if we do break this, if we make this next leg down, my money would be betting on this leg and not the current leg we've been sitting on. And if we get catalyst to play out as this is, we might get, I want to see if tomorrow, if we get the panic, is what I'm waiting to see. If we get panic, that's going to fuel us enough to break the 36.36. And at that point, I think is definitely a buy for me, because I think, yes, we could still drop down 20%. We could drop down to 3,100 roughly. If this economist is right, if we got 20% drop, again, if you're going 40, roughly around 44 or so from the top, you got a much longer way to go. You still got way down there to go. So again, from the top, roughly around 44 is on average a recession. 2691. 2691. If we're going for average here, again, it's an average. It can be lower or higher. So again, we have to see. I'm not going to say we're going to hit this. And it's something I've been cautious with in talking about this as well, because you can't just say it's going to drop that far. Yes, it's average, but you can't just say it's going to drop that far. Even when it was coming down here, I said you have to wait and see. You have to wait and see. If the thesis plays out, you need things to back your thesis. And now we have more ground to believe that it can get worse. I do believe we can break 36. But what is the pin? Was today the pin with FedEx to break us? Or is it going to be housing? Or is it going to be China and Russia? I'm waiting for the other pin to allow that foot to fully drop. But I think when that foot fully drops, it's going to break the 36.36. And this is where I'm going to be buying. This is my buy zone down here. I don't know where it is. I don't call bottoms, but I know roughly around here is where the bottom will be. And for the index to drop that far, that means everything else that's already been haircut from right now It's got a much longer way to drop. So that means all the ones that still have meat on the bone, they still could be hacked in half from where they're at. And a lot of things still just haven't recovered. So being said, 36.36, that's what we're watching. If we get a 100-point basis move next week, which more than likely I believe it's going to happen, now they're pricing in that we need 200-point basis moves. Now it was just, it's okay to have 75, but now we need 200-point basis moves. Now, given, right, like any economist come out there and say whatever they want, that doesn't mean it's going to happen. But the likelihood, I think there's a strong likelihood that next week there will be at least a 100-point basis move. And then the next one after that will really depend on the next core CPI. But things aren't looking better. People are starting to realize that. Is FedEx the one thing that shows people that, hey, things are way worse than you're being told? Because again, even though what I talk about all this stuff, most people don't listen to me, right? Like most people just listen to the average news and everything else. So they're going to go after what they're being said. And okay, it's okay. It's not that really that bad. Yeah, I've noticed prices have gone way up. I've noticed I've been working extra hours. I've noticed a delay in just about anything I try to get done is extremely hard to do, which would take, maybe a half a day to get some stuff done. It's taking weeks and months to get done. So that being said, I don't want to continue to beat a dead horse here. What really matters is how we open tomorrow. So tomorrow, again, if we gap down, I am buying puts on whatever pushes up. And I think we will have this gap is what I've been talking about. We got a huge gap here down to the 38, roughly around that 3,800. Yes, almost a 100-point drop. And then from there, you got maybe a 50-point drop. And then you got some shorter drops here around 40, 50 points. But I think we could very well find us around that 36 by next week, depending on how big of a leg down we get tomorrow. And then if we get a 100-point basis move, I would guarantee either that's going to scare the market. I think if we get a 100-point basis move in general, it's going to scare the market. People are going to start seeing panic. And then we're going to see how big of a drop we're really going to get at that point. It was funny to see because just a couple years, right, I played the stock market through the pandemic when the pandemic first kicked off, and I never heard of a limit down, and then I saw I was getting 2-3 limit downs a day. That never happens. One limit down never happens. Are we going to get limit down now? I don't know. We really have to get some panic. I think a world recession is panicky enough. But what people don't understand is it's more so because we've already had time that it's more going to be a world depression, not a recession. So prolonged beyond 6 months. We've already been in for a couple months. We've already been in a couple months. And so that's really what matters. Is that we already have had a recession, even though we try to redefine what a recession is and regenerate reports and say, no, we're not in a recession, and no, inflation is not that bad. But believe what you want. This is why I say earnings. Watch the earnings, watch monetary policy, watch what Powell says. Those are the things you need to be focusing on, not anything else. Everything else is just noise. Yes, you can get some small intraday action on some things, on some reports and stuff like that. I'm not saying you can't. But if you want big pivotal movements, those are the things you watch. So with that being said, I'm not going over anything else tomorrow. Index, see if everything gets bloody. Tech has been pushing pretty high. Tech could have a huge fall tomorrow. Tesla could have a huge fall tomorrow. Again, Tesla's been pushing pretty. Tesla's been pushing pretty hard, so it could fall a lot. Do I think it can fall all the way down to 220? I don't know. That's something I've been talking about. Like we need the panic to really drop us, but we'll have to see. So with all that being said, I do appreciate you. Go ahead and drop a like button. I know it's a very long video, but this is why I do this channel. You know, I don't do it to make profit off you. I don't do it for any other reason other to not sit on my high horse and tell you you're doing it wrong. I'm trying to just stay on here and educate you about what's going on, what I've learned. I've learned many hard lessons. And luckily enough, you know, I was able to make adjustments before they were really bad. I've seen a lot of people try to come in into these markets and think, you know, they know it after only like a month or 2 or 3 or 6 months, and it changes all the time. You got to be constantly adapting. Nothing is ever the same. Yeah, there are cycles. The smaller time frames, bigger time frames. There's always different kinds of cycles. There's always different things that change. What weighs in the market now, next year may not have any weight at all. Nobody will care about rate raises next year or the year after that. I know about, you know, a couple of years ago, 3-4 years ago, nobody cared about rate raises. It didn't really matter. You'd have rate adjustments, monetary policy. People didn't care. You had a little blip on the day, and that was pretty much it. This is different. You're fighting inflation. This matters. This is dictating your lifestyle and putting you at risk of just being alive. So being said, it's important to try to stay alive and not go crazy. Tomorrow I am bearish. It's not saying Monday I could be bullish, but tomorrow I am very bearish. If something changes, then I'll let you know. So I do morning calls. Right now, things just are not looking good. So with all that being said, appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.